As we always do on this wonderful Thursday, when we can get together and share some time and train and grow and prosper, we give you a wholeheartedly welcome from the Mid-South Atlantic Small Business Training Resource Center. Of course, we're based in Atlanta. We service South Carolina, Tennessee, and Georgia, and so glad and blessed to be able to do that. We greet you on behalf of our Executive Director, Joe Jackson, and all the folks up in Washington who make this happen. We do this on their behalf, and we just appreciate the USDOT's continued support and investment in the grassroots of the communities across the country. Welcome for this evening's sixth session of the Bond Education Program.
And our quick audit, we're going to do the roll. We have Miss T. Elaine Williams.
Here.
Our stakeholder, Ms. Javal Watson, with the Nashville Metro Government. Mr. Carlo Hyde.
Here.
Nikki, Miss Nikki.
Here. Good evening.
Mr. Travis Price.
Here. Hello.
Yes, Miss Larita Jackson.
Hello.
Hi. Miss Julianne Wren.
Hello.
And we have Mr. Daryl Jackson.
Here.
Okay.
That's who we have tonight. Mr. Jackson and Miss Wren were the first two on time before time. And we
Thank
will
you for that.
Yes. And we are going to proceed. We'll do the homework review when we go through our program audit later on. So we will again, Mr. Hebrew Dixon, we will begin with the module 5, which is the overview and banking and insurance basic coverage. Then we'll do our program audit at the end.
Sounds good.
Questions and answers, and then we'll discuss the survey. Next slide. Please.
So today we're going to give an overview. We call it an overview because many of you may have seen this information before, and we didn't want to give you something that would put you to sleep, but we wanted to make sure we have this discussion on insurances and just a brief presentation from one of our partners on banking relationships and how to get loans. So we'll go ahead to the next slide. You know, businesses need different things, right? But typically in an insurance space, they need the same thing. So this document that you all should know, and I know I may be saying things you know already, but this is the thing you get, obviously, when you say proof of insurance. If you're a customer, you're relational, you're supplied, the person who's providing you things, they want to make sure you're real, can have insurance. They want a CIO. They want a COI, excuse me. They want a COI, certificate of insurance. Now, these things are important. Now, two issues with this, right? One, you do it for yourself. That's important. But the other side of this equation that you get that from your subcontractors and the suppliers. And sometimes what happens in our world, and you may hear about this a little later in the program, we don't get those updated insurance certificates from our suppliers or our subcontractors, because typically insurance is a 12-month deal. And if you don't have the updated one, which should automatically come to you, but many times in your administration side of your company, you want to put a tickler in your system to make sure for all the subcontractors you've done business with last year, you want to make sure that you have updated COIs from them in this year. And it covers, the key thing is the effective date of policy. I mean, that's huge, because these days, you can buy a 2-month insurance for things. You can buy COVID and the web and some things like that. Got real creative on how you buy insurances. So be careful with a subcontractor that may get insurance, but it cancels in 2 months or it cancels in 6 months. And you want to make sure you're real clear about that. Basic stuff it has on it. The issue date is clear and the effective date is something you want to be clear of. Next slide. This is what it looks like. I don't know if you can see that, but this is a typical document. It's not rocket science. You've seen them before. But again, you want to make sure that you check these dates, check the policy periods, and it should cover, and we'll talk about the other insurances down the road, but the COI will give you all your insurances that you have. Now, you may have insurances from another carrier, and it won't be on this, but you need to make sure you you have those and that you study those. Go ahead, next slide. So the other type of insurance, we all know this, is commercial GL, commercial general liability. Well, make sure you know what they talk about. They, for general liability purposes, the premises and operations, productions and completed operations, personnel and advertising injury, medical payments, and legal and fire damage. So from a contractor perspective, sometimes we don't really drill with the last two, and even the third one, but just make sure if your business is in that space where you need those kind of coverages, you want to make sure you have that included in your package. Particularly fire is sometimes that is not a part of it, but you should, if that's something you see as a risk equation for you, you definitely want to add that in there. It's definitely an expense, but it's probably a good expense to have. The medical payments or something, and you'll set those limits, right? You'll see what your tolerance is for risk, and you'll be able to identify what are your limits for your medical payments and your co-payments and those kinds of things that you would have to have. Commercial general liability is very important. Many people don't have it, but it does protect you as a prime or a major prime subcontractor, because if something happens, you're covered, right? There's premises and operations. So if you're working on a project and your GL is in play and something happens to your scope of work, somebody damages it or something like that, this is where you have some remedy. Obviously do this after you interrogate the general contractors, site management entities. If there's a damage to your property, the first opportunity is to go to that prime and find out who did it, because they're the ones you should pay the dime first, if you will. But if you can't get remedy there, and for instance, the general says you're late because something was damaged, then you have to kind of get into the negotiation side of this. It's good to have a good GL policy for that. Next slide. So this is one that many people don't have. For those that work in a federal space, particularly in an airport, like in Atlanta, if you work in Atlanta, or if you're engaged at the Nashville airport, many times the umbrella policy is something they want to make sure people have. And some of your owners will want that too. What you have to do is interrogate your contract, because in your contract, it'll tell you the limits of your insurance that's required. Even if you're doing a project for a prime, it's good to get that up front. We call it the soft documents up front, so you know what those requirements are. Now, this seems really small, but I'll tell you, family, this could be huge, because you could be required to have an excess liability policy for $5 million, right? It just depends. I'll give you the example of an airport inside an AOA area of operations, airline area of operations. It is protecting you and others from the significant liability that's out there when you engage in the planes. And most entities have those requirements under that. It talks about, it increases those liability limits. So we talked about commercial liability. The excess and umbrella gives you a little bit more. And some people, in some cases, buy this. They don't want to pay the large money for the general liability policy. They'll get this on top of that, because sometimes you can buy it cheaper. It just depends on your agent. And we'll have several that can talk to you about that in the next coming weeks. It increases your liability, it broadens your coverage. And sometimes, as they go to the people with the deepest pockets, it sometimes in cases becomes the primary policy in some areas of the country where it's used. So excess and liability policy is something that, again, many of us may not have, but it's something you want to consider as you move forward in your work. Next slide. So these are things that we all know about as well. So many of us, if we're small businesses, may not have commercial liability because we're driving our own car, right? But you want to be able to, if you can, engage the commercial liability for your car purposes. There's a lot of advantages for you. If something was to happen in your personal car, or you're traveling to a site or on a site, your personal liability may not cover that because of what's there, or those terms may be higher and policies may be higher because of the risk that's there. So look at what it talks about. It talks about body, and typically what an automobile policy covers: property damage, medical payments, all those things, uninsured, insured motors. Typically things your personal automobile policy would cover. And some companies like Geico and State Farm and others can give you a commercial liability. They really want to drill into what it's for. They'll ask you things like, where do you plan to drive? How far do you plan to drive? What kind of work do you do? They'll assess the amount of cost, and the risk is what they're managing based on the kind of work that you do. So if you say you're a project manager and you go to projects sparingly, then they may have a lower premium. But if you say you were a carpenter that rides with your tools and you work as in your space, you drive on a site, your insurance may be higher because of that. But again, many of us only carry the automobile liability and not on the commercial side, on the private side. I would admonish you to consider doing this as your primary if you're driving your car, even if you're driving your car, checking on jobs, right? Because anything can happen on the site, right? Somebody can back into you, you could get dumped on with a rock or anything like that. You want to make sure that that's clear. Inside of these things, you have to deal with your own tolerance of risk. So each of them will have different limits of liability, different co-payments that's required, different down payments that's required. So you want to drill into your insurance carrier to make sure that they answer all those tough questions for you and that you can provide this for you if you so need. Now, hired and owned, now this is one thing that most people really don't have, hired and non-owned automobiles. So that covers kind of the catch-all, right? So if you're catching a taxi to a job, or if you're catching to a meeting, Uber or Lyft, obviously, that's what that kind of talks about. You hired something or non-owned. There's some other categories that represents, but primarily that's for using your insurance to give you a kind of an umbrella, if you will, without having an excess umbrella policy, so you can cover yourself if you're not in your personal vehicle, right? Say if your car broke down, you didn't need to work, and you called somebody and say, "Can you take me to work?" That's simple, right? But think about it. So they come picked you up, they took you to work, they weren't Lyft, they were your best friend. He got on the site and his car got damaged. So what would he say to you? Wait a minute, I took you to this place and my car got damaged. Well, if you had that coverage, you could potentially provide some resource from that. Of course, that won't happen, hopefully, but that's just an extreme circumstance where you can kind of consider something like that for your businesses. Many of you should already have this. I'm gonna tell you 3-4 times more. These things you probably already have, and we'll talk about a way to interrogate those as we get into the presentation. Next slide. Now, this is the fun one, right? Workers' comp. Now, workers' comp is something that everybody should have, right? You always have workers' comp, even if you have one person, we have 21 people. And this is the one that will cost you the money per se, because workers' comp, unlike some of the policies that I've been exposed to, they want their money up front. And we might have talked about in an earlier session, but typically workers' comp, you pay for what they assess you for. At the end of the year, you audit that and see if you, A, paid enough money for that, B, maybe you didn't pay it, maybe you paid too much money for that, or C, you didn't pay enough money for that based on your audit of your projects. So they'll ask them, all of you should have workers' comp if you're working on a project, but if you're some one-offs, like we've seen some one-owned companies or some supply companies, it's real interesting where people don't do workers' comp when they really should. As you see in Tennessee, it's mandatory. So most of the municipalities will have requirements for that. And it talks about statutory benefits. See, you see it, I'm not going to read it to you, but it's a medical coverage. It talks about all those things. Now, particularly if you have someone working on the project with you, right? So you'd have to say, okay, well, someone got hurt on your project, right? So what they're going to do, you're going to send them to some kind of medical facility. Up here, we've got a couple of different types. You're going to assess them if they have a drug issue. You're going to do a drug test. But if they legitimately got hurt on your site, what's going to pay their bills is your workers' comp policy. You're going to pay them particularly for their care. You may pay for some of their, besides their care, some of their other bills, some testing that may have to happen. And then you may have to deal with an off work situation. So, and when we talk about project execution, we're going to drill into how do you really manage that and monitor that. But this is something I would surely ask that all of you make sure you have to cover yourself. Because if you don't have it, you could be in a real bad space if someone gets hurt on your job and they come after you for coverage. And the question that most people try to drill into is that where does that stop, right? So if you have a person that's a 1099 and assigned to your company and they work on your project behalf of your 1099 relationship, they can often be seen as a subcontractor. So in those cases, what you consider doing is making sure for the 1099 folks, they have their own certificate of insurance. So that's clear. So if you have a worker that's a 1099 worker, that they can have their own workers' comp policy and give you a copy of that, because technically they don't work for you as an employee, they work for you as a subcontractor. Are we clear? Many of you that you probably already know that, but just want to make sure reinforce that. We talked about the medical benefits. we'll spend a minute or two on the disability side. And unfortunately, this is the worst case because this is when someone really is hurt, right? You have to deal with their long-term care. Is make sure you audit these kind of insurances to make sure you're covered, particularly in this world we live in as you re-engage the market based on a post-COVID world that we're trying to get to, running fast at it, that you make sure you have those things. And as I mentioned before in other policies, you want to make sure that you know if you're a sub, that you make sure you get the insurance docs for your prime or the insurance doc for the owner. Because if you're a third tier sub, let's say you work for they're not here, so we're gonna talk about the airport, right? So if you work for the airport and you work for, and the prime has a contract, he has 2 subs under him, and you finally get the third tier, 4th tier contract. And it's a good one, right? You love the contract, but your insurance requirements based on the front end documents go to the owner. Even though if they didn't give it to you, you need to make sure you're clear that the insurance documents for that project are binding. I've seen in many cases that a subcontractor doesn't really understand that. And they, for whatever reason, they didn't get that flown down to them through the subcontract documents that they received. And then there become some issues of liability that represents in their space about how do they manage that liability because they didn't know about it, right? So you want to make sure you do that. Particularly, you want to do it for everything, but workers' comp is clear. You want to make sure you do that. And I'm sorry, I like to talk and sometimes I get a little quick. If you have any questions, feel free to put them in the chat like we always do. And if we can answer them tonight, we'll do it. If we can't, we'll get you the answer as quick as humanly possible. Sounds like a plan? All right. So there we go. Next slide. So this is a continuation of what we talked about. And as I mentioned, for the injury issues, but you know, the worst thing can ever happen on a project is somebody loses their life. And I've been unfortunate to have been on several projects in my life where a person has lost their life. It's a very bad thing, and everybody feels this gloom on the project. But just consider the person's wife or husband or children. So he talks about benefits paid to dependents. It depends on the state. Even burial benefits. You want to make sure you have that covered in your documents that you have your policy within and your company that you have your policy with. Now, rehab benefits is just probably more norm than not because someone gets hurt and they can't come immediately back to the project, right? What do they have to do? Go to a 20-day rehab, just like grandma has to do, right? It's no different. Just like if you get hurt and you have to go get a rehab, a surgery, or what have you, you have to go to a rehab center. A couple things happen in that space, right? You have to go to the rehab, but there's still some obligation to pay because it's still in your payroll. So we just got to be clear what's in your policy. You want to try to maximize and minimize that. But you can see physicians rehab to restore. Physician rehab to restore the employee to maximum physical capacity. All right. So in many cases on jobs, I want you to try to understand what I'm sharing with you is that any way possible, if someone is hurt, you manage it on site. You have of course you have your first aid kit on site, right? Yeah, everybody has first aid kit. You can't read that. Someone's looking like, I can't see it. Can you see it? Okay, good. So in many cases, you'll get into the scenario where you don't really know what the real exposure that you have. So you want to make sure you have that covered and make sure on your job, again, if you get hurt, you have what? You have someone on your job that is responsible for safety. Now, it may be a small job. They may be not only working on safety, but they're the responsible safety person. And you should have that in some kind of orientation. We'll talk about that when we talk about job site management, but it's good to bring it here because what you want to do if someone gets hurt, you want to immediately assess that because in many cases, and unfortunately, we are in a very litigious world that we live in. You want to make sure you cover yourself and make sure you don't have any fraud cases that come to your firm. So I would advise you to do a couple of things. One, as I mentioned, have a safety person on job. Two, make sure you have a safety kit that's properly identified with Band-Aids and blah, 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 all those good things. And even in the COVID world, some of your safety providers will give you some other goodies in their bag to support the COVID issue that will probably be with us for a moment or two, even though they've got vaccines, we've still got issues with the virus jumping around, right? So you want to do what? Before you release them, before they engage your workers' comp policy, you want to make sure you assess the injury. You take pictures of the injury. You want to make sure you get reports of what happened from the person and anybody else who saw it. Sounds like a lot of work, right? But this is how you really manage your risk. So you want to make sure you do that. And this is the issue. If a person is hurt and they're in a way that they're not very badly hurt, and you can patch them up and they have to go home for a day or end of that shift, then that's fine. If a person, that means the next day they can come to work. So that's not a lost time accident, which is huge on your insurance policy, right? Your workers' comp ratings are huge. That's another thing we can talk about later. But if you can, and not to say you want to patch somebody up, if they can't come back to work, get them the proper care they need. But you have to be able to manage it on site, because some person can get cut. How deep is the cut? How much blood is lost? Those kind of things come into play. And immediately people go to Cosenca in Atlanta. I don't know what they do in Nashville, but they go there and they get assessed, and then bills start to come. And smaller companies, yeah, your workers' comp rate has a huge impact on you, and it depends on your man hours, right? So your rate is, everybody likes a 1. Typically in contracts, they want the workers' comp rate to be 1, but in many cases it's above 1. Then you have to explain why it's that way. And a lot of times have to do with accidents on a project. And for companies that are smaller, like some of us are, the accident is hits you harder because you don't have enough worker hours to make it go over from a larger, from I guess a scale point of view. If you have 10 people working on a job, you get a hit on your insurance, that's going to impact you more. If you have 100 work hours on a project, or maybe several projects, you'll be able to dilute that hit better. Somewhat unfair, but that's how it goes. The insurance, the workers' comp reg is huge, and we want to make sure that you know, you guys know what your workers' comp ratings are. Does anybody have workers' comp and know their ratings? Raise your hand. Raise your hand. I see hands, no hands. Okay, no worries. So if you don't, we want to make sure that you do. We'll build on that a little bit later. Any questions in the chat? I don't see any questions yet. Are there questions? Let's see. Let's take a look. All right, we got a couple of questions. Okay, she's okay. I got that. Yeah, you're right. The question was, she loves, one of her classmates said, I love the insurance umbrella policy. I have personal umbrellas that pays off, right? And she agrees. She thinks people overlook the uninsured part of the policy. So that's huge. So definitely. And she said she had to use the uninsured policy and it was a nightmare. So that's just a sharing of something that real time, what happened with one of our classmates. Next slide. Okay, this is one is employer liability. Again, most people don't like it, but you should have it. It says there what the particulars are. So you want to have employer liability, and that's something the insurance agent should share with you that they can get for you. Legal limits is to every employee not covered by the statute, dual capacity site or suite, and legal liability to others. So that deals with having your company under that for a couple of different reasons. So hopefully that's something that you'll have to interrogate. I'm assuming everybody has their own insurance agent. Would that be right? That would be yes. That would be, hands go up. Everybody has insurance today. Would that be yes? Please say yes. And raise your hand, clap, reactions. I'm gonna say yes, right? Is that a yes? Okay, I didn't see any, but there's one. Who's that? Thank you. Way to go. Good deal. We have one that's a yes. We have two that's a yes. Perfect. So we guys, we're repeating to many of you, but we had to go through this process. So we appreciate you bearing with us for this piece. You know, insurance is something that you try to make it exciting. It's nothing about it that's exciting, but it's so important to being able to be a good bondable company. Thank you. A good bondable company. You want to, because your bonding company will ask you what they want to see. They want to know your MRI. Your MRI is your measurement for workers' comp insurance. That's huge, right? They want to know where you are with that. If a person asks you what your MRI is, if you tell them it's a 3, they're gonna not talk to you. That's how important that is, because that tells them you're not a safe contractor. So If your MRI is 0.75, they're gonna love you because that means it's below 1. And that's what that does is measure your risk as relates to workers' comp insurance. Okay, it's called the MRI. And you should all, if you haven't checked it, I would advise you to check it and make sure you know what that is. And if it's over 1, you should find out why. Because in many cases, it may be like your credit, right? Maybe they got something wrong, right? Maybe there's something that's reported on there that I think it falls off every 3 years or something. Maybe it's fallen off. Maybe it's an old issue that hit your firm. Somebody tripped and fell and they were hit on your insurance. You had to pay a bill for that. And it hit your workers' comp insurance and made your rate go up and your rating go up. That's huge. And that's a seller for you. Just like having a bond, a lower EMR is huge for you. Any more questions? Okay, yes, perfect. I would expect you guys to. That's why we just wanted to make sure we did an overview tonight, just in case some people didn't have it and that they needed to have it. Okay. So I think we have maybe, let's go to the next slide. I think we're about done with insurance. Let's see, we got maybe one more. Yeah, okay. This is a fun one, right? Employer, independent contractor. So remember we talked about you have an independent contractor that works for you. So these are the things you want to drill down to: the right to control or conduct the work, the right of termination. All these things are either one: independent employer or independent contractor. And most of these you can do either one. You can fire an independent contractor. You can manage the method of payments. The right to control the conduct of the work. You can define that in the agreement. Freedom to select and hire helpers. That they can do as long as they come past you. Typically for an independent contractor, you can supply them with their tools or they can supply their own. Depends your agreement with them. Most times you hire an independent contractor, they bring their own game. They bring their own this, they bring their own that, because you're hiring them to do a job. So make sure you know that, in fact, if they come saying, I'm ready to work, you hire me, I'm a body, but they don't have a boot, they don't have glasses, they don't have tools. Those are things that you expect them to have, and how you audit that is up front, right? If you do an independent contractor, then your agreement that they sign, make sure you delineate everything that's required for your project. And don't assume that one project is like the next project. So an independent contractor agreement, I would not advise you to have a blanket one that covers a person for the year if you're doing multiple projects, because every project will have some little differences with them that may have to be addressed for that. Scheduling, self-scheduling work hours. I wouldn't do that for either. So this is kind of some trick questions. Freedom to offer service to other entities. That's a tough part right here, right? So if you have an employee or an independent contractor and they're out there doing a great job and somebody looks at them, I've seen this on projects many, many times. People think it doesn't happen. Somebody will hire your person away and pay them a little more money. If they see them really getting down really good, hanging board, putting wires in, hanging lights, if they're really good. So you got to protect yourself from that. You can do that in some employment agreements, and you can do that in some other independent contractor agreements to make sure that won't happen. The other thing I would counsel you to do is to look at this entity in your contracts, because in many cases, some of the subs that I've seen on jobs bring strong people, and a larger prime or a larger trade or larger contractor will try to hire them away. This happens every day, right? It interferes with your ability to compete in the marketplace. There's a lot of legalities with that, but to be clear in your contract, make sure that you put a clause in there that you do not hire my people, or you do not go after my people that work for me, whether they're independent contract or others, because what would that do to you? A couple of things, right? So if you've had this person work for you all these years and he gets on a job and somebody loves him, they really do good work, and they want him $2 more an hour, he's going to leave you or she's going to leave you, right? So if that happens, what'll happen to your productivity, right? Go down, go down, go down, go down. So in the case of an independent contractor, same kind of deal, right? If they're hired away from you, your ability to perform the scope of work on your particular project will be compromised. So what happens then? And this has happened probably yesterday or what happened tomorrow, that a main person gets taken off the job and they get slow on the schedule and their budget goes up because they have to pay another person maybe more money to come in. So this is a huge thing, not from a policy perspective, but making sure as business owners that you understand how to engage your policy to make sure you have the right coverage. And inside your contract, it delineates some of that. And inside your contract, it also talks about how you manage the things. And in your own company, you can decide how you manage your risk as it relates to the various insurances that you have. So do you have any other questions about any of these wonderful things? I know you always have insurances. I'm sure you do. One thing I would ask you to do, and it's a question coming at the end, no matter if you have an insurance company, you've been with them for 40 years, right? Test them in the marketplace. Every 2 or 3 years or so, you want to be able to make sure you're getting the best bang for your buck. And not to say you're going to leave your company that's been loyal to you, because insurance is a relationship thing, just like it is in personal insurance. But just like your car and Geico and State Farm and all these other folks can give you better car insurance, house insurance, boat insurance if you have that, motorcycle insurance, every year or so, you need to make sure you're paying the best price you can, particularly in this market now, because I would argue to say the insurances they're kind of hungry right now, just like bankers are kind of hungry. We heard that earlier, right? You want to be able to make sure that you get the best price for what you can pay for. And most times, if a firm that you've been dealing with, they should really bring you cost savings sometimes. And that was something you can challenge them with as well. So those are some nuggets that'll hopefully help you be able to do what? You want to increase your retained earnings. So these things seem small in a micro way, but think about your company. Think about, sure we will. Think about, someone asking me to get copies. Absolutely. Think about how this can impact your company when you have multiple things like this and you drilling in your costs, or you didn't manage your workers' comp insurance, your EMR went up, right? And you can't get on a project. Most cities won't let you come on the job with greater than one. I don't know what the Nashville city government may do, but I know in Atlanta, you can't come on a project and as a sub if it's greater than one. Okay, so again, we try to give you this from a 2 vantage point. One, making sure you have all these things covered. If you don't have them, think about them, right? And ask questions to your carrier to make sure they have them covered. And 2, if you have it, audit them and make sure you get the best bang for the buck. One of the things I've seen in the COVID world that everybody's been hurt, right? And unfortunately, sometimes people try to make it up on the first couple of relationships they get. I've seen prices go out the roof on certain things. So you have to be really, really careful about this and make sure you're getting the best value for your company. Okay, next slide. Now this one, professional liability, this is probably more for designers, and, creative folks. And is that right? That's a trick question. No, I would dare to say that professional liability is for everybody, right? Some people want professional liability for people who don't do work, right? They do other things. They consult. I'm a project manager on a program management team, and I'm giving you professional advice. So if I give you something that's wrong, or am I a client of yours? Say I'm a program manager at the Atlanta airport, and I advise you to build the runway this way, and it was wrong, right? That's when that comes into play. Those PL policies come into play. You see, it's negligence, misrepresentation, or inaccurate advice. So for those of you who are in that space that advise people and your clients for different things, then you want to make sure you have this covered. That if you give, it covers, look at this, protects individuals and companies against what? Liability incurred as a result of errors and omissions. Usually that's architects, right? Designer folks, that's what I was talking about. Errors and omissions, but more as we get into this CM at risk world, that's the delivery method that's going on right now. We see that more and more on the professional service side for different things as well. So some of you may not have that. Maybe you need that. It's dependent upon your risk and how you engage your relationships, whether PL is important to you. I would counsel you to do one thing. Whether you need it or not, price it. See what it costs. Because when you're buying insurances, a bunch of them, sometimes they bundle for you, right? Just like Geico bundles, right? Think about it. They all bundle. So the cable bundles, everybody bundles, right? So you may be able to get this for cheaper than you may anticipate and give you a little more coverage for your investment. All right. Anybody have professional liability? Give me a hand. Give me a clap. Give me a say yes, I do. I would. Okay, there's one. Do we have one? Nope. Okay, didn't think so, but something to consider. No worries. Sometimes we have design professionals, engineering professionals in our group. We'll make sure we cover that as best we can. Oh, we have one. There we go. She has it. Great. Wonderful. So there we go. Next slide. Now, commercial property is something you need to have. It's a better policy than your building policy that we talked about earlier. But if you own something that says building and contents, equipment and say floaters, for equipment purposes, it floats, covered insurance, and tool floaters if you have insurance for your tools that's there. And this typically is on projects as well. So if you have a project, you have your commercial property coverage. If someone steals something, their bills of risk could come in. If something gets damaged before you turn it over to the owner, your bills of risk would come in play. If someone steals stuff from you, right? You have it on a job, you locked it down, they got a big bolt cutter and cut it and took your toolkit or took your $100,000 saw or what have you. It's good to have those kind of things. It covers building and contents. Again, typically it's commercial properties for your business property. So you want to make sure you have that covered. Next slide. Okay, so we covered the meat of insurance. And what we did was try to give to you some views from a business owner of how to engage the insurance agents and how to make sure you have your right pricing, how to make sure you deal with the coverages and how you really understand the loss. I would counsel you to do this. Insurance, in many cases, is the most misunderstood tool that a company has because the company has to get it because of their contract. And they do that and they think they're good. But what my counsel to you is spend time interrogating your insurance policies, understand your risk in each of the cases that I explained to you, and make sure you understand your obligation inside some of those risks. And more importantly, as you look at that, and it may take a team to do that, and you can engage your insurance carrier to help you as well, know how you can mitigate your risk inside the insurance policies. We talked about a couple this evening. We talked about making sure you have safety kits on the job. We talked about making sure you have reports, make sure you deal with injuries in a timely fashion, how to manage those injuries. If they're on-site injury, that they can stay there, that's better. If they have to go off, they must do what they hopefully engage the proper care. But if something minor, because you don't want a lost time work accident on your policy, because that affects your what? Your EMR, right? EMR, that affects your EMR. So I just want to make sure you look at that, and there's some questions at the end, so you can consider that. So any questions on insurance? We'll give you the presentation. We sure will.
We have, I see one question, Hebrew.
Okay, great. What's the question?
You said EMR. Somebody asked, was it E is MR or
EMR. EMR.
E is
EMR.
And the last question was, by P&L, do you mean in the event that you can no longer work and you are paid your income?
Was the P&L is what it I'm saying what the P&L is.
Miss T, could you
yeah. Personal liability?
Yeah.
That's not so much that's for you, right? There's other places that's covered in your workers' comp policy, but personal liability covers you, and then in case someone gets damaged. Yeah. Yep. And if I don't answer that right, I'll make sure I get it, but I believe that's the case.
Okay.
Yeah, I have a question as well.
She said she have a policy where if I can no longer work, I receive my income.
Yeah,
she said it took a very long time to get that.
Right. So that's for you personally, though, right? Yes, I would assume. Yeah.
Yes.
Yes, absolutely. Yeah. If it's called, some people call that, and we didn't have it on the slide tonight. Some people call it key man or key person insurance, right? So if an owner of a business goes down and you're the main person, man or woman, and you can't do it, then somebody's got to cover that. Maybe you have to bring another person in or what have you. They ask everything. Okay. Thank you for sharing that.
I have a question.
Sure.
Yeah. So as business owners, sometimes we supposed to be expert on everything, negotiating insurance, but we find that, we may not have the expertise in everything. which good resources can we use to figure out all the insurance pieces? Would be like, you know, if I'm working with a bonding company, can they be advising me, you know, in the right direction to find good deals? Because, you know, if it's not your expertise, you don't even know if you're getting a good deal or not.
Very well. There's a couple of different places you want to do that. One, even though it may not be your expertise, that's what I kind of gave you this evening. You want to make sure that you know a little bit about it, right? You don't want to be an expert on everything, but insurance, you want to know, because insurance hits your pocketbook, your wallet, your bank account, your savings account, your retirement account. So, you know, make sure you understand as best you can from a layman's perspective. That's one. Second thing, absolutely. Your bonding agent should be able to help you. Some bonding agents actually provide this insurance as well. AC Surety, that's not what they did, but many bonding companies provide these kind of services as well. We'll give you several of those who are friends of ours, and they'll be glad to work with you. And if you just have a basic insurance agent, make sure that you at least listen to what they say. The key is, though, is to make sure you have some general understanding. The other thing I would counsel you to do is ask those tough questions of the insurance provider. Because sometimes people give you insurance policy, you pay it, they sign, you go ahead with it, right? Don't do that. As you move forward, making sure that if you get the best price in the market, they bring you a proposal, sit down with them just like you would a subcontractor and interrogate every piece of insurance, because all of these things are in the policies of the insurance, right? And typically we don't read those. To your point, we're not experts to that, but we want to make sure that you spend the time. Just look at this as a subcontract that's costing you millions of dollars if you mess it up, because ultimately it is. And you can sit down with that person, have an hour, 2 hour long meeting to go point by point. And eventually you want to become not an expert, but very knowledgeable on insurances for your business to make sure that you have everything covered that you want to do. And make sure, because sometimes you'll get stuff that costs too much. They just cost too much, right? Because you can get it cheaper. So you want to drill into that. But there's no easy answer for that. That was a great question, though, because many people say, I'm not an expert, let's get an insurance company. That works, but I'm gonna tell you, man, just drill into the insurance as best you can. Be anal about it. This is one area, although it may be boring. And again, any company that wants your business will give you as much information as they can throw out. But if you don't have some baseline for it, you're still looking like a deer with the headlights, right? So yeah, it's got to do a little bit of everything. Long answer to your question, but a little bit of everything. Okay. Great question, though. Thank you for that.
Thank you.
Mm-hmm. Any other questions? Okay. Well, this evening we have for you one of our dear friends, Mr. Farrand Logan. Now, Farrand Logan is with us virtually. He's going to give you a very, very, very methodical look at how to engage the banking process, right? So if you have any questions for Mr. Logan, just write them in the chat. We'll answer all those that we can. And then if we can, we'll make sure we get them to him to help us answer those. Now, Mr. Logan is from Citizens Trust Bank. He's in Atlanta. Now, these things that he's going to share with you is not germane to Atlanta. That's why we put him in play. These things that typically or any bank would want these kinds of things to be able to. So Regions Bank and all the other banks that are in Nashville, Citizens, I think there's a Citizens Bank in Nashville as well. So all those folks will have the same kind of conversation. But, and again, many of you may already know these things and maybe some new for some folks. So without further delay, we're going to go ahead and bring Mr. Farrand to the screen. And unfortunately, there's a short little thing before that, but we'll get past that. Go ahead, please start the video. Uh-oh.
We can't hear it. Wait, something with him test.
Hold on, you got it.
Well, hello, my name is Farrand Logan. I am the Chief Lending Officer at Citizens Trust Bank. I am excited to be here to talk to you about loans and how businesses can secure a loan and the best ways for businesses to be approved for a loan. And even some of the challenges that you face when applying for a loan. I want to talk to you about that and ways to overcome some of those challenges. And so we'll start with just some of the challenges. Now, anytime an individual comes into my office, oftentimes they don't have a good clue about what they're looking for. They don't understand what's involved in seeking a loan. Well, we are here to help and make that process a lot easier for you. I can tell you that there are typically 3 challenges that people are faced with anytime they are seeking a loan. One is to have adequate capital for a loan. And we define capital. Now, capital in general is how you finance a project or a business. It can be in the form of either debt or equity. Anytime you go to a bank is looking at capital to be defined as a borrower's skin in the game. How much skin do you have in the game? All banks are looking for a borrower to have capital in the deal. No bank wants to take 100% of the risk. They prefer that a borrower take some risk for whatever they're seeking. For example, if you're looking for to finance a $100,000 project, we may ask you to put 15 or 20% of your own money into the deal. That represents the capital that you are injecting into a business. That represents your skin in the project. And that's critically important to a bank. You can also look at capital for a company who is starting up, for example. Anytime you're starting up, it's important to do a set of pro formas, a set of financial projections. And it's also critically important to do those projections on a month-by-month basis, because when you're starting up, the most sensitive time in that business are those first 12 months. So it's vital that when you're doing your projections that you don't project on an annual basis, but that you project on a month-to-month basis. And so, for example, that first month, you're looking at revenue, you have your operating expenses, and typically during that first month, you're going to have an operating loss. So that's when your expenses exceed what's coming in. And then month 2, you may actually have an operating loss as well. But what we hope to see over a period of time when you're doing your projections is for that operating loss to be smaller and smaller. But what can't happen is a business can't succeed by operating in the red. So it's critical that when you put together your financial projections, that you also define how you're going to fund those operating deficits until such time that you generate enough revenues to exceed your operating expenses. And then therefore, from that point on, be operating in the black. So that's one of the challenges that I would say that people face when they come and apply for a loan. It's just not having sufficient capital for their business. I would say that the other challenge would be collateral. You know, every bank is looking for collateral. And collateral is defined as the secondary source of repayment. The primary source of repayment is your operating cash flow. The bank always look for your operating cash flow to be the first and primary source of repayment. But if all else fails, and we never want to ever have to get into a collateral situation, but if all else fails, the bank is looking for some asset that you own that the bank can sell and pay off the loan. So if you go into a bank and you apply for a loan and there's not sufficient collateral, that may create a little bit more of a challenge for you in securing that loan. So you need to think about collateral. You need to think about what could possibly serve as collateral. You need to think about your business assets. You need to think about your personal assets. It can be things like equity in the building. It can be cash surrender value of life insurance. It can be a piece of equipment. It can be a blanket lien on business assets. It can be accounts receivables. It can be any number of assets that the bank can use either individually or in combination to secure that loan. Here are some common missteps when people apply for a loan. The first is that they oftentimes will not have adequate financial information. Oftentimes people will apply for a loan and provide internally prepared financial statements. And that may work well for you as a business owner, but oftentimes you might be the only person that truly understands those financial statements. It's important that instead of doing your financials internally, that you engage a third-party CPA to do your financials. And it's not expensive if you engage that CPA to do compiled financial statements. And when with a compilation, the CPA is basically arranging your financial statements in a format that is generally accepted by most external factors, such as a bank that you may be applying for a loan. The second misstep that people often run into is not necessarily being able to articulate their financial need. Now, the bank will figure out the best structure for your need, but you really need to be able to talk about your business, talk about your cash flow and how you make money. You need to show passion, but most importantly, you have to believe in yourself. You have to believe in yourself so that I can believe in you. You know, we do have underwriters that we have to talk to, and internally, I have to be able to make that sale internally to be able to get your loan approved. We want to help you realize your dreams. We want to be able to capitalize your business. We will help you to become $1 million company. Let us do that for you. We will walk you through the process. If there's problems or challenges that you may have, we will make sure that you have what you need. We will make sure that you have the resources in place, the support that you need in order to secure that loan. We want to make it happen. Do you want to make it happen?
Okay, next slide. Okay, you guys, make it bigger, please. That was Mr. Farrand Logan of Citizen Trust Bank here in Atlanta. Back, please. Back, please. These questions, right? One more forward, please. Thank you. These are the questions that Mr. Farrand Logan thought that you guys should take into consideration. I want you to write them down. Okay, everybody? And also I could email them to you, but let's write them down. Number one, Mr. Logan wanted to know, when was the last time you obtained a comparison quote for your insurance? Number two, he wanted to know, he posed this to the audience, how often do you meet with your insurance provider? And number three, do you know all of your deductibles for your insurance policies where applicable? These three questions are what Mr. Farrand thinks that you have to be mindful of, and they are important for you guys to at least know this information. I know we see Miss T. Williams here. She gave us a good response. She says, in November, she did a comparison quote. That's great. She met with her insurance provider last week. Great. That got me blushing. And yes, she keep a rolling document with all her policies summarized with contacts. That's great. Miss Julianne Wren says within the last 3 months she did, number one, that was a comparison quote. Then she did every year that she meets with her insurance provider. And yes, she knows her insurance policy deductibles. So that's great. Mr. Jackson said he's in the process of getting a comparison quote. So we're getting you guys on board. You guys are doing very well so far to understand. And the rest of you guys, these three things you should do. Make sure I'm giving you time to write it down. Here, the first one, number one, was, when was the last time you obtained a comparison quote for your insurance? Number two, how often do you meet with your insurance provider? Number 3, do you know all of your deductibles for your insurance policies where applicable? So that's where we all are right now. So we're done with Mr. Farrand's video. Those are the questions he wants you guys to be able to answer and to practice these actions. Okay, next slide. Are there any questions from the presentation with Mr. DIXON? Any questions that you put in chat that we can pose to Mr. Farrand? We say, Miss T gave some advice. She said to draw companies to me, she followed the ebook that Jerry with Fly Credit wrote. And she said she's a master at building business credit. Miss T, could you speak about what you're speaking about? Unmute yourself.
Yeah, there's an African-American, she's a social media influencer. Her name is Jerry. And I learned about her through Danielle Pierce. Danielle Pierce is an African-American that sits on the Forbes Real Estate Council. And so Danielle Pierce introduced us to Jerry, and she's just phenomenal. She understands how small businesses should build credit. I mean, it's just like a recipe, and so many people have followed. So I bought her ebook last year, and I'm following it. And she said you will be turning down money. You will be, and it really does work. So I keep that ebook open on my computer, and everything from getting a real business landline in my name to I've just followed her of what they're looking for, just like a recipe, and it works. And I'm just very grateful that she's credible. And the goal is, instead of me always pursuing other companies and these micro lenders, to position yourself where you're drawing them to you, where they're courting you.
Mm-hmm. Now, you spelled Jerry, J-E-R-I. Do you have a copy of it right there to show it?
Yeah, let me find it on my computer real quick.
And Hebrew Dixon wanted to know how much does the ebook cost?
I didn't pay over $20 for it. It may have been $10. Let me see if I can find it on my computer.
Okay. And any other question for Mr. Dixon? You could always type something in chat and we can get it back to you. Or also email me the questions. And okay, next slide, please. Okay, our next session, the instructions for next session is, our next session is going to be bidding and estimating. Could you go next slide, please? And it is by the instructor Lee Thomas and Lewis Parkins of Project Cost Solutions. We switched sessions with them, but they will be next session on March the 25th, 7 to 9, same place, same time, back time. Now, could you go back one slide, please? To prepare for that session, I will be emailing you an exercise that they would want you to practice, to attempt to do before. So I will email that to you Friday or Monday to prepare for the bidding and estimating session. There's one pre-exercise. Okay, next slide. Next slide. All right, so this is the advertisement right here for the March 16th. Most of you guys are registered. Our Access 2021 Nashville Metropolitan Service Area, the MSA mean Metropolitan Service Area BEP procurement ready, willing, and able webinar. You see the pictures here is Miss panelist Javal Watson. She's on the line tonight. She was. We got Mr. Steve Bland. He is the Chief Executive Officer over at We Go Public Transit and the Regional Transportation Authority of Middle Tennessee. We got Mr. Vince Malone, the Director of Civil Rights Division at Tennessee Department of Transportation. And we have from We Go Public Transit along Mr. Steve Bland, Miss Amber Gooding. She is the Director of Procurement and Business Diversity. Also, Mr. DIXON will be getting some information for the Nashville, BNA Nashville International Airport. He will get some information from them, from their procurement from their website, and sharing that with you. Most of you guys have already registered, but that's the link is there. I will also email the flyer update to you again, March the 16th from 4 to 5:30 p.m. We did notice when we changed the time earlier, we got a great response. So we're appreciative very much that you guys registered. It should be very informative, and it's $1 million worth of opportunities. So we have, we'll go back to, Miss Elaine gave us the name of that book. The website is called jerry@flycredit.com. It's spelled J is in Jack, E-R-I at F is in fly, L-Y-Y, 2 Y's, credit, CREDIT.com. I will repeat that, Jerry at FLYYCREDIT.com. That is what she shared with us tonight. Now, I'm going to start and go into our program auditing. I'm going to be nice to all our participants. You guys know that everyone has not sent me their photo, right? I will give you guys a call. I'm not gonna call you out tonight. And the homework from last period, we had Ms. Brinty to discuss cost accounting. No one sent me their homework assignment. I will email that out again to you. And Mr. DIXON wants you guys to make sure to participate. Well, that's part of the program, because I sent you the email asking for your exact name for your certificates. You guys, most of you replied, but not all. So we got that into play, because when you finish all sessions, you guys get a certificate from the United States Department of Transportation that you participated and graduated from our bonded education program. Let's see, is there anything else? We're happy that you are attending. That's going well.
Just to
And what
just to
else? The
reinforce
next
what Ms.
thing we talked about, the next,
Ms. Beth talked
yes,
about is that we've got to have those names, because we got to send them to Washington to get certificates made, and it takes about a month. So we're gonna send them out the end of this week, first of next week. So hopefully your names are right, because if they're right, then it'd be great. If they're not, then you're gonna have a wrong name on your certificate from Washington. So we just hope you give us the right name and help us get that up there with 100% accuracy. So when they come back, they'll look beautiful for you. Okay. But by the end of, say Monday is our deadline. We got to get them out of our hands, send them up, because it takes a minute to get it through the bureaucracy up there. Okay.
and that's, we got finished a little early tonight. We need to get our homeworks. Can you speak about that, Mr. DIXON?
Yes, I just, you know, you don't get a grade on it, right? But one of these things that we share with you is that a lot of these things, particularly the webinars, you know, you get a lot of information, talk, and you CC, but to really validate if you're getting this, you respond to some of the questions. They're not hard. Just take a moment or two to fill them out for us, because it helps us make sure that we're doing our job right, that you're getting some. See, it's all about saturation. In education world is contact time, right? But in response to the contact time is response to us, which is knowing that there was some saturation done that you get it. So we really appreciate it. To help us understand how to do better. And we appreciate all that you do, and hopefully it's been helpful to you. Thank you, Ms. Bass.
Okay, the next slide. Do we have this? This is the last one. So the survey, I will send you guys again tomorrow to evaluate this session. We hope everything was informative. Let me know if you have any questions. I'm always here for you. You guys know how to reach out to me. You got my email address, my telephone number. bbarner@MSASBTRC.org is my email address. So you guys get lots of emails from Beth. And I do call you guys typically the day of class. You guys doing very well, because we have the majority of our class attended today, and I did not call each and one of you guys. So we over halfway through. So we greatly appreciate your participation. You're gonna gain a lot. You hope you gain a lot from us. And next session will be with estimating and bidding. And who has a question?
There was a statement about making sure you have your IDL grant paperwork, your PPP grant. There's no more money coming out, and most of the local banks will help you with that. So if you have a bank relationship in Nashville, they're most likely will be the ones that will help you engage that. So definitely reach out to that. The other thing that we're going to share with you, obviously, there's this huge 1.9T, right, stimulus package. And this particular package, it's not as much as we saw in the last in Obama administration as far as the project for building, but you want to get ready for what? You want to get ready for the transportation bill. The transportation bill is going to be massive, and every state's going to get a little play on it. They already put out about $900 million of grant money for states to consider and compete for. They did that about 2 weeks ago. They didn't get a lot of fanfare, but it was a $900 million ask for states to respond to their best projects they want to see. We've seen this before. We've seen it at Tiger in Obama's administration. Trump called it something else. In essence, these are projects that states participate on, compete for, and they get funding for projects. So you're going to see that. And then again, as I mentioned before, the transportation bill, you know, Nashville's got a whole lot of road works going on, but this transportation bill money goes to cities for road work. I know in Columbia, for example, in South Carolina, we did a BEP there several years ago. They got $10 million of work on a road extension. In Atlanta, we got $10 million for the extension of ML King, as well as about $20 million for building a solar plant at Armada station at one of their maintenance facilities. So those are kind of things you get in front of when you watch the money. I'm kind of putting this in play now because our procurement cycle is coming up. Obviously having a bond is important, and God knows it is, but without any projects, why you have a bond, right? So we want to make sure you're aware, and you want to be smart about it. You know, projects that you engage with clients, because you know their culture, you spend time with them. So what we counsel you to do is make sure you mind your vein first, right? Where you're good at, mind your relationship first. Yeah, you can jump to the airport, yeah, you can jump to the city, and maybe you need to do that, but don't do that just because the water looks good, you're gonna dive in, right? You need to test the water, you need the relationships. And they're gonna talk a little bit about that next week. Be clear, Nashville and the whole state of Tennessee is gonna be tremendously impacted by the transportation bill, as all states are. So it behooves us, right, to get ready for that and to be prepared to participate. And many of these projects, unfortunately, won't be bundled down to the itty bitty level. They just can't do it that way. So you got to look at that and see how best you can parlay your skill sets, maybe with some others and some creative JVs, or maybe with a prime, because you bring some value in execution, also diversity strategies, to be able to participate and be a viable partner. And I share this with all seriousness, to be a viable partner on the project. So when you get through, you make money, that's good, but you also should learn something and be better by it and not be damaged financially because you didn't perform or it didn't work out the way you wanted to. Okay. Thank you guys. Have a blessed evening. We appreciate your participation. Javal, we thank you for being with us this evening. And all of you, you just invest in great time. And we're so grateful that you're putting in the time, because we really work hard to make sure we serve you as best we can. So thank you for being with us. Ms. Beth, thank you for all you do for us. And Mr. Dorch, and behalf of Mrs. Dorch, we want to appreciate you guys for what you guys do, putting this package together for the IT side of it. We appreciate both of them, Ms. Janice and Ms. Tom 3. So we appreciate you guys so much. Have a blessed evening.
Okay. Does everybody see what Ms. T wrote in the chat? She said, even if you received a idle loan, you can increase it. It's called a loan modification. Most people did not receive the maximum loan amount from the SBA. And she said the two most important pieces of data you need to input are the gross revenue and cost of goods sold. For most companies, your cost of goods sold is zero from your tax return. Everything else you can leave blank. Not filling out the 4506T correctly will slow down your idle loan from being approved. And I know the SBA had sessions on this. One of them I think we sent to you guys. Yes, I did send it to you guys for you if to participate. That was the Georgia District SBA. Make sure you look and see for your guys Tennessee SBA. That's LaTonya Chanel. It's directed in Nashville District. So that's make sure you can reach out to your SBA there locally. And she said, hopefully everyone completed your SERG application with the state of Tennessee in November. They added even more money in January. So we have our classmates very resourceful also. Okay, good night. And I'm getting ready to, she said, what is SER, Miss T? Miss Nikki want to know. SERG, SERG.
SERG stands for supplemental. It's, in other words, it's free grant money that the state of Tennessee, it was funded down from federal to state. And I think a lot of people that had like, you know, the various DBE certifications, I guess, you know, raised their voice and said, hey, we didn't get a lot of this money. So the state of Tennessee in November came out with SERG. It's a grant. It's money you don't have to pay back. And all of these programs are designed so you can fill them out really quickly. All of them ask the same information. You might have to do, you know, turn in your income statements. I think they ask for your income statements and balance sheets for August through November of last year. Really simple stuff that any business is going to already have. And you input it, and then they're using a third party to applications. But I got my application in November, and I think in the first 5 days they said the money had maxed out, but people still continued to input their data. And when I finally, even though I did it in November, they just finally finished processing it in January, and they said, oh, Ms. Williams, go back and we're going to add 3 more months of money in here so you can get more money. And they have a calculator where once you input like your revenue and your cost or all that, they've got a calculator in advance that tells you how much money they're going to give you. So they're behind on processing the applications, but all that money is just being funneled from federal. So I want to encourage you. I know how much all of us have to do as small business owners, but whenever you see the state or anybody who says we have grant money, we have this money, everything else needs to kind of go to the back burner and just spend 8-10 hours and plow through all the list of things you need to get them and upload it into their portal so that you can be positioned, because most of that money is gone in less than 96 hours.
Mr. Dixon had wrote the SERG is the Supplemental Employer Recovery Act.
Yep.
And you can go to your website, is tncaresact.tn.gov/SERG. So that's what we have. Ms. Nikki wanted to know, are there any grants that are not state specific?
There's grant money for everything. There's so much money being given away from private companies to nonprofits to, there's money everywhere. I mean, literally there is. It
Well,
really is.
okay, so would you like for me to share, Ms. T, your information with Ms. Nikki?
You can.
Because Ms. Nikki, you have our contact list that your class peers information is on there, and Miss T. Elaine Williams is speaking, and contact her from the contact list. And that we're going to close it out now. Everybody be safe. We're doing well, getting past safe and not. And we're here. That's all that counts. We're above ground, and we've been blessed and alive and healthy. So good night.
Good night. Thank you.
All right.
We'll get our homework done.
Okay.